Hey, good morning, everybody. Today is Tuesday, February 10th, 2015. My name is Cliff Backus. I'm the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. Stocks closed lower for a second consecutive session yesterday. Trading volume was light. Let's take a look at the NASDAQ. NASDAQ on Monday was off 18.39 points or 0.39%. Trading volume was light, and we closed at the bottom of our trading range. Wanted to take a look at a 6-month chart. Usually we look at a 3-month chart. I just wanted to point out the uptrend that the market had been in prior to the end of November. Since the end of November, the NASDAQ has moved sideways. Can't really determine which direction that it wants to go. NASDAQ has been bracketed by support at its December low in the 45-47 area, and resistance at its November high in the 48.11 area. Right now, we are on a aggressive buy rating on the NASDAQ. In order to go to a sell rating, the market would have to do 3 things. First, our 10-day simple moving average, which we show in green, would have to be trending lower. Our 21-day exponential moving average, which we show in pink, would also have to be moving lower. And the NASDAQ would have to be below its lower envelope right here. So we're not in any danger of going to a sell signal anytime soon. Volume yesterday was light, thereby avoiding a distribution day. And let's take a quick look at our MACD histogram. MACD histogram continues to hold above the 0 line, which is bullish, but if you'll notice, it's shorter than the prior day, which is bearish. And so our immediate bias on the NASDAQ composite right now is neutral. Let's take a look at the S&P 500. The S&P 500 on Monday fell 8.73 points or 0.42%. S&P closed in the middle of its daily trading range, which is a little bit encouraging to the bulls. Trading volume, which isn't shown here, was lighter than the prior day, thereby avoiding a distribution day. We have a lot of distribution in the S&P 500, but as we mentioned over the weekend, all of this distribution disappears by the end of the week. And that gives us just the 3 distribution days, assuming that we don't get any more distribution days between now and the end of the week. In the meantime, we have 1, 2, 3, 4 accumulation days. Assuming no more distribution by the end of the week, we could have more accumulation days than distribution days. That would be bullish for the S&P 500, which really has struggled recently. We seem to be having a lot of trouble bettering minor resistance in the 2064 area, but we have held minor support in the 1992 range. Right now the S&P struggles to make progress. Taking a look at the MACD histogram for the S&P 500, we see that the bar at the right edge of the chart is above 0. but again is trending downward. Being above zero is bullish, trending downward is bearish, and because we have a bullish and a bearish signal, our immediate term bias on the S&P 500 is neutral. Real quick, our 1 to 6 month timing model on the S&P 500 is giving us an aggressive buy signal. That's all I've got today. If you want to talk about the markets or any of our trading strategies, please feel free to give us a call or drop me an email. Or if you'd like, come on by the office, see what we're up to. If you're out of the area, we can set up a Skype session. See my contact information on the home page. If you've not already done so, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. Finally, please take a quick minute to look at our disclaimer video posted below this one. Again, my name is Cliff Backus. That's your daily market review. Have a safe and profitable day. Keep your stops in place, and I'll see you again tomorrow.